All right, so let's start from our last week's movements. All right, so our weekly candle closed as a strong bearish candle, right? And it rejected the area that we were looking at for our reversal, which is around this area, right? So our weekly candle is now our confirmation that price could continue bearish this week. And if price does follow that, we should see price very bearish this week. All right, our target, with our first target around here, and then we have our second target around there. All right, so the reason why we're saying this is the first area we should see our rejection, right, is because all right, so we have a look at this area right here. Can you see it?
Yep.
All right, so a candlestick, right? You have an opening and then you have a closing, right? But then you also have a wick. So this area between the opening, the body of the candlestick, right? On its own, it's a range, right? So this is a different range. And then if you are to look at the wick, right? So the high of the wick and the beginning of the wick is also a range. So that's why we are saying we should see some action around this here. We should see some rejection, right? Because now from here to the low of the wick, that's a different range. So it is okay for price to show some rejection around this area, because that's a support right there.
Gotcha.
This is clean traffic, but in this clean traffic, we have the range of the body and the range of the wick. And since this is a higher time frame, that should cause some rejection at some point. So let's say our first weekly target. Okay, weekly target. And then also its support.
So our weekly target, we're just trying to target the range of the wicks.
Yeah, the beginning of that range, right? So we get out of some positions at there, and then we hold. And if price starts giving us some bullish movements, we can accept it because we are expecting price to reject at that area for a little bit. Because remember, price doesn't move in a straight line. So for price to keep pushing lower, it has to make a high. So if we have price falling down, for it to fall down again, it has to come up, and then that movement up, they'll collect, accumulate some orders, right? And that can push price down again. And then once they're down again, they need to collect some orders for price to keep on going down. That's why we have price falling, and then price was bullish for a couple of days, and then it fell again, bullish for a couple of days, and then it falls again. It's the same thing why price ranges. It ranges for a while, right? And then it falls, and then you see price ranging again, and then it falls. Because price can't move in a straight line. Someone has to buy for them to sell, and if they don't have enough buyers, price can't sell that far. So they have to make someone buy. They have to give us some bullish price action for us to think that price is gonna buy, only for it to end up falling. Is it making sense?
That makes a lot of sense. And really with last week, everything you're saying is just making so much more sense. I wanted to ask you about though, okay, so we understand we need to retest on the support or the resistance. As far as like with the first touch of support or resistance, how do you feel about, I mean, I know you're more of a confirmation, but do you feel like it's a guaranteed reaction off the first touch of a support or resistance?
It's not a guarantee. That's why we prefer having confirmation. Well, sometimes price is gonna touch it, right, and tell you that it's selling. Remember, we already have people who are buying. So price will give you the first touch, right, to show you, to make you think that it's selling. and then you open sell positions only for it to come back again around that area, right? And tell you that it's buying for more people to open buys. And then you are busy closing your positions because you're thinking price is now buying, only for it to fall again. So it's how they make people buy and sell at the same time until price is ready for it to actually sell. That's when it sells.
Got you. That makes so much sense.
Yeah, so if we move on to our daily time frame, right?
Okay.
On our daily time frame, we have price has been bearish for a very long time. And if you look around this area, it's even more perfect because that's where we have an order block. All right, so this is our last bearish candle before price went up. So that means now this candle, the range of this candle is an order block. All right, so for someone who thinks price is going to go higher, they might even be looking at this area to buy. So they think price went up, it came back to retest, and if price makes a strong rejection around this area, they think price is going to go higher. So if price is going to do this for me, we would want an example of a very strong bullish candle that's pushing price higher. Then we know, okay, price is rejecting this area for it to go higher. So that's another view that some people might be following.
Got you.
All right, so that's why we also have that support right there. So now if we move on to the 4-hour time frame, or don't forget that on the daily time frame, price has been bearish for a very long time. So that means we need to see some bullish candle around this area for price to actually give us that fall. So let's highlight our previous breakout. So this is our previous breakout around this area, right? That previous breakout, that's where we can expect price to come back and retest for it to go down, right? It can give us maybe something like this, and then we get some sort of a range or an information for price to fall first to this area, our target. A small retest, and then continue going lower, or it might just continue going lower without even retesting. Now, let's move on to the 4-hour time frame. On the 4-hour time frame, we are saying that this is our previous breakout, right? We're expecting price to come back and retest around this area. So since we're expecting price to come back and retest this area, we have to look where is our order block, and our order block would be this candle right here. So this candle was the last very bullish candle before price went down. So if you want, you can even highlight around that area, that's your order block area, because price can reach into that range of that candle, right, and reject at any point in the range of this candle. So let's highlight that's our order block.
Gotcha.
Okay. All right, that's our order block area. Now, if we move on to the 1-hour time frame, this is where things get interesting. All right, so we know this is the area where we're expecting price to actually reject. So if this price action, if it does come all the way up, if price goes above this zone right here, we will accept it. But if it goes above our zone right here, do not buy. Just wait for price to actually come and show you everything that it needs to do until price breaks out. Maybe it goes above this area, or maybe a weekly candle closes above this area. Then you know, okay, price is ready to go higher. Otherwise, it's not. We would have to wait for a candlestick to close bearish. Once we have our bearish candlestick that's closing around this area, we know price is going lower. But for now, we might be expecting price to come back and retest this area, right? However, where price is at, we have a range that's happening right now, right? So we open a sell, right? When we have 15-minute confirmation, and we'll look at it. But for now, you can look at this. We have price tried going higher, right? But it got rejected. And then we have a bearish candle, and we have a bearish hammer, right? So that's, and price is at a resistance as well, right? So in this range that we have a low right here, our first low. So this bearish candle might be pushing price all the way down, right? So our target is only this area, because now we know price is made a low and then price is made a high. All right. So we can't assume that price will fall all the way down to our target, to our low. We have to use this low as our target for now, because that's the range that we've been given. And if price is ranging, it will touch here and probably reject, come all the way up again. It might keep falling, but we don't know that yet. So we use that as our target.
Got you. That's something right there. That is fairly new. I would have to go over that a lot more as far as, when prices creating those high and lows and, how price wants to move in between those ranges. Like,
yeah, exactly. That's good. All right, if we move on to our 30-minute time frame, right? This is where it gets interesting. So we had a bearish 30-minute candle, right? That pushed price lower. This candlestick, right, was our first signal that price is going down. Because if price wanted to go higher, we should have seen this bullish movement continue, especially with the fact that this bullish candle, it closed bullish and with a wick on top, and the body is big enough. So if price wanted to go higher, it would have done the same thing, because it happened here and then it happened here again. If it wanted to go higher, we should have seen the same thing, but we didn't, right? We had a bearish candle, and that bearish candle was followed by a bullish candle. But the only problem we have with this bullish candle, right, is it did not close above. Yes. So our 30-minute candle that's printing right now will be the final confirmation. If it closes bearish, we know price is most likely going to go lower, and we know our target. But if it closes bullish, even the first 15-minute candle, if it closes bullish above, we already know that our price is being invalidated. And if the 30-minute candle closes bullish above our resistance, we know price is being invalidated. Is it making sense?
That makes a lot of sense.
Yes, that's what we're looking at right now. That's why we entered that trade, because of this 30-minute candle. And then if you look at the 50-minute time frame, 15-minute time frame, do not concentrate on it if you don't understand it well, because it's a smaller time frame, so anything can happen on it, and you might see something as a confirmation when it's not. All right.
Got you.
So on our 15-minute time frame, right, this candle was sort of our confirmation, all right, because it went all the way high, right? We had a minor resistance here, right? Price broke out, and then price went all the way up, but it was rejected. If price wanted to go higher, we should have seen this candle closing strong, but it wasn't, right? However, instead of our next 15-minute candle, this candle, right, to push lower, it closed bullish. The only thing that's still keeping us in the trade, right, is the fact that it closed bullish. It closed bullish, but not above that weak range, because remember, price, that means price created some sort of a range around these 2 points, but price failed to close bullish above. So right now, it's now all going to depend on how this 15-minute candle is going to close. If it closes bearish, it looks like it's being rejected to go higher. So if it closes bearish, we know price has more chance of pushing down. And if we do get a candle, a bearish candle that closes below this area, that's our final confirmation.
Got you. Let me mark that down too.
Exactly. So even if you want to add another one, you're free to add one, because price is being pushed down. That's our final confirmation. Because if it wants to go higher, we should see it going higher here. But if it doesn't, we know price is going lower, because price has been rejected. And it's even a perfect rejection, because we have a rejection, we have a retest that's going on right now, if this is a retest. All right. So another push, right? That means this has been our impulse correction, and price is ready to make another impulse. So we take advantage of that.
And for the close, this would be I know you explained it, but just for the close on this 15-minute for our final confirmation, we would need to see it close inside of the wicks or below the wicks.
If this 15-minute candle closes anyhow, as low, you see, right now it closed bearish, right? That's literally our first confirmation that, okay, price could be going down. So it's our first confirmation because our previous 30-minute candle closed bullish, but still pushing up. So with the way this one closed, still in the body, in the range of our previous candle, right? That means we still need to see another candle that will close at least below, right, our previous 30-minute candle, and that would confirm to us that price is now going down.
Got you.
Yeah, so if it's still in the range of our previous 30-minute candle, it's telling us something, but it's not yet confirmed. So this is more of a signal for a confirmation. We want to see a candle closing outside the range of the candlestick.
Got you.
Yes. So right now, all we have to do is wait.
Cool. That sounds great. Yeah, I got the game plan down, and
Do
I have some active entries in already.
Yeah.
I don't really have any questions. All in all, though, let me see here. Let me go back to my trading view just to make sure. Are you posting this video later too?
Yeah, we'll post it for you right now.
Okay, got you. Well, yeah, I'll just be able to go back to the video then.
Yes, then you can at least understand better. And then if you have any questions, you can just message me.
Got you.
All right, so let me post it for you right now. All right, I will talk to you later.
Thank you so much.
You're welcome. It's been a pleasure.
Yes, have a good day.
You too.